Hello and welcome back to the Geordie Pig Investor channel. Today we are going to be looking through our July portfolio update. In today's video we're going to take you look through how the month of July has performed in my current dividend portfolio, see where it's currently at and my thoughts on the portfolio and where it is heading. And we'll just go through a few of the stocks in the portfolio, especially the standouts for the month. If we have a look on this chart here, it'll show the last month and how it has performed. On the 1st of July, my portfolio was returning around 3%. And throughout July, I had quite a turbulent time for the most part, not really getting up very much past that 3% mark, kind of dipping down towards 2%. You can see on the 17th of July, it was actually down at 1.77%. It's had a massive increase since then and has gone all the way back up to returning over 4% right now. And we can see overall money wise that is now returning just shy of £1,000, whereas at the start of July it was returning around about £660. So we've had a nice little increase. It hasn't been an easy ride. It's not been a straight line, which it's never going to be with investing, and something that you're going to have to accept within yourself, that unfortunately portfolios and the stocks that you pick are never going to be simple straight line going up, which we all wish it was, and it was that simple, as then everyone would be doing it. But you've got to ride out these turbulent times, and when this portfolio was down at around that 1% mark, you can see I was actually adding a little bit more money at that time, and I haven't got loads of funds available right now as I've really pushed hard at the start of this year. But the money I do have available, I was pushing into the portfolio this month, and we can see I have gone from investing £20,700 at the start of the month to now having over £22,000 invested by the end of the month. So we've added a very, very good amount of money to the portfolio that I'm very happy I've been able to add. And I'm hoping in August I'll be able to continue to add some money every single week, especially into my ETFs, and then any stocks that I see a little bit of value in, I will also add into. So if we move across to our pies, we can see that my main ETF and chill pie, which has all of my ETFs in, is still the best performer, returning over 11%. I'm very happy to see. We can see the three stocks I have in here and the distribution between the three of them. Over £3,000 now invested in the S&P 500. We have just shy of £3,000 in the FTSE All World, and then in the Nasdaq EQQ we have just over £1,000. So between them, we can see it's a healthy £7,000 total now, which is great to see. We can see I also have around about £7,000 in my UK growth dividend stock portfolio and £7,500 in our US growth dividend stock portfolio. You may be thinking, well, by looking at these, I've got an 11% return in my ETF pie, and I've only returned 3 and 1.7% in my UK and US stock dividend portfolio pies. So why not put all my money into the ETFs? Well, personally, the reason I haven't done so is because I have a massive interest in actually purchasing individual stocks, and I have a massive interest in knowing that by purchasing individual stocks that paying a good dividend and have long-term dividend benefits with dividend yields that are increasing at a great rate, I am going to receive good dividends over the next few months and years to come, and those dividends are only going to grow, and that really motivates me to see that my dividend total per month is going up, and to track these dividends, as you will have probably seen on my other videos in the channel where I go through in more depth how much my dividends are paying monthly. And to see that progress really motivates me and keeps me interested and keeps me wanting to invest into my stock portfolio. I believe if all I was buying was ETFs, yes, I would get a great return, but there's very minimal dividend return on those, and I think my motivation would be a lot less, so I would actually be investing a lot less money into my portfolio. And the way I look at this portfolio is that I have my emergency fund set up already so that I never need to touch this portfolio. The money that goes into this portfolio, I will never take back out. That is the goal with it. Once the money comes into my ISA account in here, it is tax-free, and I will never be taking that money back out. It will stay in here, and it is never going to come out of here unless, or once I get to the amount where I am actually being able to live off it, and then I'll be able to take that money out that I receive in dividends per month that I can then use to pay for my living expenses, which is very exciting to think about long term. That's obviously long way away right now, as the portfolio is only valued at £23,000 and not quite the £1 million that I will be aiming for over the next 15 to 20 years. But we are on our way, and considering I still haven't been investing for a full year yet, it'll be coming up a full year in 3 weeks' time. I'm very, very happy with how the portfolio was looking and the amount I've been able to do within my first year of investing. So, like I say, we'll go through a few individual stocks and have a look to see how they're performing. For the most part, my stocks are actually performing fantastic. We only have a few red positions. My main issue with the portfolio has been that the red positions are on the slightly bigger side compared to some of the green positions that are only slightly up. So we can see Starbucks is a massive one in my portfolio. This has actually recovered very nicely over the last week, being up over 4.5%. So it means I'm not down as much as I was over a week ago, but it is still down around about 8%, which is around about £160 in the portfolio, which is quite a lot. GSK position is not a huge one down. It is down 7% as well, but it is only £20 because I haven't got a massive position there. But it is Diageo and Burberry, which are the two main ones that are down in my portfolio, being down £500 between the two of them. I definitely am very, very bullish on Diageo long term, and I'm continuing to add to this position. It is currently down 12%, but I believe that this stock will recover as it has very, very good fundamentals and good business policies. I do believe long term that this will recover, and one that I'm very happy to buy into. Burberry, on the other hand, I have now got around about £1,000 invested in this company, and we can see it is down 30%. It is my worst performer by a mile in the portfolio, and is one of those positions where I did my analysis on the stock. I still believe it is actually at a very nice price. We can see it has actually recovered 9% over the last week, so it is actually getting better, but it is still massively down. And it is one stock that I don't know, it may be I need to sell out of for a small loss, or even just part of my position to reuse and reallocate that capital elsewhere, as I do believe it could be used better off elsewhere. But having said that, it does still pay a really nice dividend. We can see the yield is actually up at 8% right now, and it means that when the dividend payments do come in, I am still getting a good little payment back from them. So yes, although it is down on the position, I am receiving that dividend payment. Also, to add to my pies, obviously these pies are paying very, very nice dividends. So yes, they are returning less than the ETFs, but with the dividend payments included, and what they're going to be able to do long term with the snowball effect by I constantly reinvest all of my dividend payments, I believe that these will pay off for me. And with the investments I have made as well, I'm very confident in these stocks because I've researched all of them. I've done my analysis on these stocks, and I believe long term, not only will I am purchasing dividend stocks that pay a very nice yield, but also ones that are going to grow that yield long term, and the stock appreciation is going to go up as well. So very, very happy with my current portfolio and how it's shaping up. It's been a little bit of a turbulent month, but it is looking like it is going to come out on the better end as of right now. If it is to dip back down and dip towards that 1%, 2% return mark, depending on the stocks that are making it dip towards that, will likely be the stocks that I look to buy into. At the end of the day, I want to buy stocks at a discounted price, and I'm very, very comfortable and believe in all the stocks that I currently own in my portfolio. So when I see a dip in these stocks, they are trading at a discount, and I'm very happy to then buy into those stocks. So I always dollar cost average into my ETF pie every single week without fail, and I buy one stock of Diageo every single week without fail as well. I'm just doing a challenge throughout this entire year just to see how that goes. Obviously down 12% right now, which you may look at and think that's been a waste of time, but it actually, to me, looks like it is a great buying opportunity right now for Diageo, and I'm probably going to look to purchase more than just that one stock this week because it is down so much, and I definitely am a strong believer long term and bullish on Diageo. So this is the current portfolio. How is your portfolio doing right now? Have you got any thoughts on my portfolio and the direction it's heading? I'm very, very much happy to have that nice split of UK and US stocks, as you can see throughout my portfolio. I think it's great to have the balance between the two. It's very, very nice to see this return over the last month and to see a little bit of a recovery as well. Always reassuring to see that and see that the stocks I'm buying have had a bit of a recovery. But we'll just have to see how the next month now goes. And like I say, this is the main number I'm focused on. As long as I'm improving this number and this number is going up month to month, then I know my overall portfolio size will also be increasing. And this is currently the highest my portfolio has ever been valued. It's the first time we've crossed that £23,000 mark, and hopefully if we can continue in this fashion, we'll be able to hit that £25,000 portfolio value before the end of the year. Hope you've enjoyed today's video. Let me know what stocks you're currently buying, how your portfolio performed over the last month. Please like and subscribe. This is the Geordie Pig Investor, over and out.